Our next guest is Glenn Kelman, CEO of Redfin, one of the largest real estate brokerages and mortgage originators in the U.S. Redfin trades under the ticker RDFN on the NASDAQ, and we'll be talking about their research and what Glenn sees maybe a slowdown in the housing markets. But to what extent will the housing market slow down next year? We're going to find out. First, a word from our sponsor, NordVPN. On this show, we regularly cover how to grow and protect your assets, but one of your most important assets is your privacy. Every investor needs to protect their digital privacy and footprint against hackers and potential viruses. According to Chainalysis, 2022 was the biggest year ever for crypto hacking, with hackers stealing $3.8 billion in cryptocurrency. And according to Duke University, more than 80% of US companies claim to have been successfully hacked. One of the best ways to protect yourself and your privacy online is with NordVPN. Not only does NordVPN hide your identity online from malicious actors and criminals, but it also comes equipped with malware protection. NordVPN also prevents you from accessing dangerous websites, allowing you to enjoy your favorite financial content securely. And the best part is that it is easy to use. Just download and click. NordVPN is available for your phone or computer, and they're currently offering 65% off on a 2-year plan plus 4 extra months. Simply click on nordvpn.com/David Lin in the description down below to learn more. Glenn, it's an absolute privilege to be speaking with an expert on real estate. How exactly you think the real estate markets will play out for both investors and consumers. We're going to get your take today. So welcome to the show.
Thanks for having me.
I want to talk about this report that Redfin published not too long ago. The title is Redfin Predicts 2024 will be the year home buyers catch a break, with home prices falling and new listings rising. Now, I'll preface this by saying that mortgage rates have already come up and slightly down this year. But at the same time, the Case-Shiller Price Index for homes across the country, that index has not really seen a bit of a break. It's just continuously going up. Why is it, before we talk about your predictions, why is it, in your opinion, that home prices have not corrected despite the fact that mortgage rates are up, the Fed funds rate was at 5.5%, and prices are still high?
It's bizarre because in 2008, obviously, we had this massive financial crisis that was led by housing, and there home prices collapsed as much as 50% in the Sandbelt of the United States. But this time around, prices have been stable or actually increased because rates shot through the roof. And that meant that not only were there fewer buyers, but there were fewer people who were willing to sell a house. Right now, if you have a 30-year mortgage at 3%, trying to get someone to list that property for sale has been very difficult. And usually in a housing market correction, the rest of the economy also collapses. So people don't want to sell in a down market, but they have to. That was the foreclosure crisis in 2008. This time around, the rest of the economy is extremely healthy, but housing has gotten really sick. Home affordability has been at a 4-decade low. Interest rates increased faster than at any point in modern history. And so you just have this situation where even though there are very few buyers, the scarcity of sellers is even stronger. So it's been a really frozen market in 2023 with sales volume at historic lows.
The first prediction you have in this report says home prices will fall 1%. First of all, is that across the board, or is this select jurisdictions?
I think some markets will have larger losses and other markets may go up. But for the first time in a long time, we see more inventory headed to the market in the first quarter of 2024. And that should create some relief for home buyers who are looking to catch a break.
This report was written or published right before the Fed announced that they're possibly done rate hikes. We're expecting at least 3 cuts next year. Did that announcement spark any revisions to your forecast?
I think we're more bullish on home buying demand. So what led to the forecast is that so many people have been contacting us. We're a real estate website, one of the top sites in the United States, but also a real estate broker. And so many people had contacted our agents saying, I want to put my house on the market in January. What do I have to do now to get it ready? And I have been on every news channel in the US saying that real estate is dead as a doornail. I don't see any light at the end of the tunnel. It is a whale turd at the bottom of the ocean. And now there is some light at the end of the tunnel, because for the first time, we aren't seeing a massive amount of listings, but a significant amount of listings. That's what led to the report. And then subsequent to that, this interest rate drop, which was quite significant, happened. So maybe demand will meet there. That means that maybe prices won't fall quite as much, but sales volume is definitely likely to go up. If you look at mortgage purchase applications over the last 6 weeks in the United States, that's up about 19.5%. So we do think that rates could go up again. The Fed is already being criticized for acting too hastily. The economy is still hot. Retail sales are really strong headed into the holiday season. So it's anybody's guess what will happen. But the one thing that we're sure will change is we think that more inventory will come to an inventory constrained market.
Yeah, that's exactly what I was going for next. Inventory. So the logic that home prices haven't fallen partly because people weren't selling their homes because rates are high. If they have to sell their homes, they have to buy another home and refinance it or finance at a much higher rate. They don't want to do that. But if rates are going to fall next year, Glenn, does that mean more people are going to put their homes up for sale? And so maybe we'll see more demand, but we may also see a lot more supply. Is that possible?
I think we'll see a modest increase in supply. Any increase in supply would be so welcome because supply has just been falling and falling month after month. So I'm not here to say it's going to be a complete sea change. It's just going to be a meaningful reversal in a trend. If rates were to go down to 5 or 4%, I think you'd see a lot more inventory, but it's more likely that rates will stay above 5%. And many people are going to do the math. They can't even buy the house they're living in now if they have a mortgage at 3% and they had to repurchase it at 5%. So really, we're seeing some rate locked inventory being released. And we're also seeing another factor, which is just that you can only put off moving for so long. If you've got a second child coming, if someone in the family died, people have been delaying those decisions in 2023 and they've just got tired of waiting. So we're just meeting many customers right now who said, I didn't want to sell in the summer of 2023, but I think I have to by the summer of 2024. Housing is a basic need.
I want to talk about some recent price movements in the housing market. So we talked about your predictions. We talked about how you think markets may fall 1% or perhaps more. Now, I'm reading articles that these home prices are already falling as we speak. In fact, they probably already happened, which is why they're being reported as news or events that have already happened. Newsweek, for example, reported that homeowners lose $122,000 on average as housing prices drop. New homeowners, I'll just read you a paragraph. New homeowners across the U.S. are confronting a rapid depreciation in their home values. Recent data showing an average loss of $122,000 in home value in some areas. The American dream is showing signs of wear. Says, is that a data that you're observing as well? That we're seeing rapid depreciation in home values, is in their words?
I just feel more careful about it. And it's not because I'm a real estate broker. I've been a long advocate for lower home prices. It's just that rates fell from 8 to 6.5. And the number of people piling onto our website looking at listings over just the last 7 days has really gone up. And so even my own feelings about whether home prices could soften have changed. I do think that the builders, when they sell new properties, that has gotten a little bit bubbly because there's so few existing homes for sale. The builders have been able to command a premium, and then sometimes you have some buyer's remorse there. But for the most part, I haven't seen kind of precipitous declines that I saw in 2008. In 2008, I bought my own home at the very bottom of the market. Um, and you know, it was 30, 40% off. I just haven't seen that here. What we are seeing is it's really hard right now to put buyers and sellers together. We're in the business of putting deals together, and the buyer is looking for 100,000 off, and the seller is willing to give $5,000 off. And that always happens, but usually the gap is $10,000 or $20,000. And right now the gap is really large. And that just speaks to the volatility of the market where everyone is feeling a high degree of uncertainty. And if they're going to do a deal, they're going to try to do it on their terms. So it's been really hard to put deals together until like the past 2 or 3 weeks. And then people have pounced just because of the rate.
Yeah. So generally speaking, then you're not concerned about a big collapse next year, is I think the
Well,
sentiment
there's
I'm getting from.
two
Yeah.
answers to that. One, I don't think there will be a big price collapse next year. I just don't.
Right.
And two, if there were, I think I'd be kind of happy because when there isn't any price correction in housing, that's what makes it so unaffordable. Like sooner or later, prices have been going up 10, 20%. And if that happens year after year after year and wages are going up 3% year on year, you are going to have an affordability crisis. And that's where we are right now with home affordability at a 4-decade low.
Now,
I don't know how much
another section
less,
of your,
but I would love a significant price decrease. And I think we're going to get less than that.
are you saying this is a homeowner, Glenn?
Well, that's the problem. I mean, homeowners form this cartel where they prevent governments from building properties near their properties, and they prevent other policies that could make housing more affordable. To me, it's such a difference. We were talking at the outset of the show about my traveling between Seattle and Vancouver. Canada doesn't seem to give a crap about whether people's home prices fall. They are more worried about whether new Canadians can afford homes. And that is different than the United States. It is a very mixed constituency here, very mixed feelings about falling home prices. And I think we need to get it together and say that we want houses to get cheaper so that young people can buy them.
The people you said you're seeing more interest in applying for mortgages, is that people applying for second or third homes or new home buyers?
It's a mix. I mean, this isn't a number that came from us. The mortgage purchase application number is a generally released number. It comes from the ABA, this Association of Mortgage Bankers. There isn't much refinance activity right now. These are purchase applications. It's mostly first-time home buyers, but there's other people who are buying luxury homes, buying second homes, and things like that.
And the people who have come to you for applications and services, have you talked to them regarding what they want to do with rent? Are they raising rents next year, keeping them the same, or do they have they spoken to you about this?
Well, we're also a rentals marketplace, so we put apartment buildings on our website and try to get people who want to rent them to the property manager. And our sense is that rents are pretty soft right now. There's a massive amount of supply coming into the rental market. Many builders have been wary about building for sale homes and instead have switched to building rental homes. And so the amount of large property buildings coming onto the market in 2024 is significant. The property managers are somewhat worried about being able to fill up those buildings. And if you look at rents, not just in terms of what everyone is paying, but what new people are paying when they come into a building and they're not just renewing their lease, what are they paying? Those are the numbers that are the leading indicators, and they're somewhat soft. And so I think rents are going to soften somewhat. They already have. It just hasn't shown up in all the data yet.
Which areas in the US do you think will see the most softening in both home prices and perhaps rents next year? Is it the large metropolitan areas, East Coast, West Coast, Midwest? Do you have any idea?
That's such a good question. The history of the United States over the past 3 or 4 years has been that the big cities where taxes have been higher and affordability has been low have seen an exodus. People are leaving California, New Jersey, and New York for Texas and Florida, chasing affordability, but also lower income taxes, lower capital gains taxes. Some of that has started to reverse. So, for example, for the first time, I was visiting Austin, Texas, and I heard our real estate agents say that people who have moved here, Austin used to be one of the hottest markets in the United States, are leaving because they've been called back to work. So they're going back to work at Amazon in Seattle, or they're going back to work at Apple in the Bay Area of California. So there are trends working in different directions on this, but still the long-term trend is that more people are moving to the South and the Southeast, and they're chasing lower taxes.
One of your predictions, I think number 4, says mortgage rates will steadily decline but remain above 6%. I'll just read a paragraph of this report. We
Yeah.
predict the average 30-year mortgage rates will linger around 7% in the first quarter, then decline throughout the year. Then you cite that the Fed will likely keep interest rates at their current level at the start of the year, even though inflation is largely under control, but they're likely to cut 2 or 3 times starting
Yeah.
in the summer. So yeah, the logic makes sense to me. My question is, Glenn, if people are expecting mortgage rates to fall later in the year, would you not, as a home buyer or potential home buyer, would you not want to wait? Why would you apply for a mortgage now? Why not wait till next year, maybe even 2025 before I start getting in? Because I know rates are going to be lower then.
Yeah, well, I would be more sensitive to the price of the house. If you think home prices are going to decline, you might want to wait. It's easy to refinance a mortgage. It's hard to move houses. You can do that every few years, but you often destroy capital when you do that. So mortgage brokers and real estate agents like to say, marry the house, date the rate. We already have customers who bought at 7.5%, nearly 8%. just a few months ago who are asking us about refinancing. And their real focus had been, can I buy a house now where there are no other bidders when maybe 6 months from now there might have been? So they feel like they got a deal on the house, perhaps, and then they're able to get a deal on the mortgage later.
Number six is an interesting prediction. Renting will lose its stigma. Demand for large rental apartments and houses will climb as more young families embrace the renter lifestyle. We're already seeing signs that young people are redefining the American dream. Nearly 1 in 5 millennials who responded to a 2023 housing survey believe they'll never own a home. Okay, so this sounds more like a nightmare than a dream, but I understand where you're going with this. Um, either
Especially
way,
to me. I sell houses.
listen, we young people, we can't afford homes. I get it. Is there going to be a time in the future when you think it's going to be more affordable, at least at the same level as maybe my parents or even grandparents' generation, where they could buy a home straight out of college, and that's no longer the case.
Well, I do think there's been a massive political shift. So in the United States, the left wing has often wanted to regulate housing for good reasons, rent control, zoning restrictions, environmental reviews. I'm an environmentalist, so I care about all of that. But the effect has been that liberal cities have become incredibly unaffordable. And now, in places like California that have been a bastion of regulation, they have cleared away so many regulations that allow you to build an accessory dwelling unit in your backyard without any clearances, that have required people to build more densely near mass transit, that have done just a number of things to make it easier to build a house in America. It has gotten so hard over the past 50 years since World War II to build housing. And I think we're going to see more almost industrial scale policy favoring construction. So that will be a drop in the bucket because depending on who you ask, we're between 5 million and 20 million units short of the housing that we need to bring prices down to the level that your parents enjoy. And so many people think that young folks are on TikTok spreading bad vibes about the economy and they just don't understand how good the employment numbers are. But half of Americans under 35 are living with their parents. And there is no way that you can be optimistic about leading a better life if you are sleeping on mom's couch. You can't even have anyone over. You can't start a family. You can't even really date. And so I think the housing crisis is really going to become a political crisis. It's already lost a bunch of American mayors their jobs. And I think it's going to become a national issue where we just have to get much more aggressive about building housing. And the American government, just like the Canadian government already has to be pretty one-dimensional that we actually want home prices to come down, not to go up. Often the real estate industry, often American politicians have been unified about wanting lower bread prices or gas prices, but really mixed about whether they want home prices to come down. And people your age just aren't going to be able to buy a house if they stay where they are. So I think change will be painful, but it has started to happen in a way that I never would have believed 2 or 3 years ago.
I'm just wondering if everyone just hypothetically speaking, if everybody wants to rent, the rental market is going to explode. We're going to have property developers planning for that scenario, building condos and
Yeah.
townhouses just
Yeah.
for rental purposes. Rents are going to go up. Would there come to a point then that owning a home might actually be cheaper on a monthly payments kind
Yeah.
of
I mean,
basis? Would
that's
that
already happening. That's already happening. Um, and I want to be clear that I don't think people want to rent a home their whole lives. There's a small fraction of people who want that. I just think there's despair among people under 30. If you look back in history, when baby boomers were coming of home buying age, they owned about 30% of US national wealth. And millennials at the same point in their journey own less than 20%. And almost all of that is because of the real estate asset class, that they just don't own a home. They can't enjoy any price appreciation as a result. They're not participants, they're spectators in this part of the economy. So I don't think people are embracing renting because they could buy a home and just choose not to. I think they feel like they can't buy a home, and some of them have thrown in the towel and said, I'm going to start going out to eat. I'm going to go to a trip to Brazil or wherever it is instead of scrimping and saving for that down payment. There's some despair among younger people about whether they're ever going to be able to afford a place. And I
okay? So suppose you saved up, you have the money. What
Yeah.
are the financial benefits of owning a home versus renting? Are there significant benefits besides the potential for appreciation of your home price?
Oh, well, the financial benefits are all about appreciation and lower taxes. So you can write off the cost of borrowing the money and you get this appreciation while also living in the house. If you are buying houses that you're not living in, that you have to get someone else to live in, and you're comparing that to the equity investment class, equities still outperform real estate, but you can't live in a stock and you can live in a house. And there are just so many laws that make it easy for you to pass that asset on to other generations, for you to be able to refinance that asset and then write off the interest. Um, at least in America, we really want people to buy houses. There's a reason they call it the American dream. And so that just makes it very financially advantageous. And the mistake that I see people make just making personal financial decisions about housing is they try to time the market too much and they don't focus enough on just buying the right house. You know, Warren Buffett says with stocks to buy and hold, it's the same in real estate, except the transaction fees are so much higher in real estate than in trading stocks. And so I just work with all sorts of people who say, I'm going to buy a house because it's cheap right now, but they buy a place that they hate and they end up losing money because they have to move 2 years later. I've seen people buy at the absolute peak of the market, but buy a home that they love, and it still works out over a 10-year time frame. So I think being picky about the house rather than picky about the timing is, the best advice I can give. I've lost money myself buying the wrong house, so I'm speaking from personal experience.
Yeah, generally speaking, and this is obviously a generalization because I know there's various tricks and methods, but what holding period do you need to see before you realize a return on your property?
It depends on the fees that you're paying, but about 5 years. So Redfin offers a lower fee. That's why we exist. But most real estate agents charge 5%, and then the mortgage is going to add another 2 or 3 points. And so if you're giving up 6, 7 points of appreciation, you can't get that in 2 or 3 years usually. And even at 5 years, you're close to break even. But once you're living there longer than 5 years, it's usually going to work out. And most people think they're going to outgrow a house a lot faster than they do. We are mostly sedentary creatures. We talk ourselves into staying in good situations and bad situations. You're going to live in the house longer than you think. So often it works out.
For investors owning a home, do you think cap rates will improve into 2024 and beyond?
I think, investors are starting, part of the reason that inventory is coming back is that investors are starting to liquidate their assets. And some of that is by choice because their cap rate isn't what they want it to be. In some cases, it's because, they just have a margin call where they have to get the money back to whoever gave it to them in the first place. And so, if you're talking about an institutional investor, they're probably more savvy than I can possibly help in, the 30 seconds that we have to answer this question. I meet individuals who want to list their home, or excuse me, buy a home and get an investment return on it. I look for a tool belt. I want to make sure that they've got a hammer and a saw and they know how to fix up a house because otherwise they are not going to have the domain expertise to really make money.
Okay. Now, I've heard reports that Airbnbs have seen sort of a slowdown, a lull in a lot of
Oh yeah.
places,
Yeah.
particularly the Sun Belt states.
Yeah.
Is that a signal of a slowdown in the broader market for you, or are they completely separate?
I think it's partly a signal, but also there's been a regulatory regime that's turned against Airbnb. It's made it harder in some cities to have Airbnb properties. But coming back to Texas again, Austin was a hot spot for Airbnb empires, and there were so many people that were trying to sell those assets before property taxes are due. Texas doesn't have an income tax, so it has higher property taxes, and people just couldn't make the nut. So I do think that the Airbnb empires that retail investors were trying to build um, haven't always worked out. That's not a great business.
And so, what are they going to do with their properties? I presume sell them.
Some are going to hold on to them and some are going to sell them. Like we have helped people sell some of their Airbnb properties over the last 6 months because that market has gotten tougher. Sometimes it's because the county or the municipality have said you can't rent this property out night and day, day after day. You have to live in it for at least part of the year, and that's made things hard too.
Now, here's my question, Glenn. Who is buying properties right now? At least from your observation with working with Redfin, is it mostly locals? Is it people working in the towns and cities in which these properties are being developed, or is it foreign money coming in?
It's less foreign money, although there's always that in the US. That has drastically changed in Canada, by the way, because of legal changes there that have really impressed me. It was such a dramatic shift. In the US, it's people moving across the country. So just we still see this post-COVID effect. Some of it is about tax reform, where it's just much lower taxes in different states. You can't write off your local taxes against your federal return. So nearly a third of the people we serve aren't moving across town. They are moving across the country. And that trend is held up post-COVID for the most part. And then the other factor that's really common is that they're cash buyers. So if you have to borrow the money, the cost of capital going up to an 8% mortgage rate is unsustainable for many people. And so there was an influx of cash buyers in the late summer of 2023. And now, just to put it in real terms, if you're buying a median home in the United States, in the past 6 weeks, your mortgage payment has dropped about $250. So the cash buyers, as a proportion, are declining slightly just in the past few weeks because of the rate relief.
One of the more interesting predictions in this report is that there's going to be a huge change in the industry, and particularly when it comes to hiring agents. In this paragraph, I'll read, it says that rather than hiring their own agent, many home buyers will work directly with the listing agent. This has long been common where the listing agent works for a builder, but with inventory low and competition amongst agents high, more resales are now being handled entirely by the listing agent, often for thousands less than what the buyer would pay if a second agent were involved. And then you later talk about how the Department of Justice could be involved in litigation. What's going on here? What's this all about?
Well, there's four trends. One is that the fees real estate agents charge have finally started coming down. Redfin has offered low fees for a long time, and often our sales force would complain that our fees were too low, that we could charge customers more and get away with it. And in the past 12 months, when I go out to meet our sales force, I hear the exact opposite message. And I've been in this job for 18 years. It's the first time that I've heard that actually other folks are competing with us on price. There's 1.5 million real estate agents in the United States. There's around 800,000 listings. So competition has just gotten really nasty. That's the first trend. The second trend is that because there's also an inventory shortage, the people who are listing properties are often saying, instead of hiring a buyer's agent, if you really want to win this property, why don't you just work directly with me and I'll handle both sides, the seller and the buyer. And that is similar to models outside the United States where there's only one agent for every sale. That would have a massive industrial impact just because our industry is based on two agents for every sale. But the DOJ has now gotten involved, where it's suing an MLS or involved with an MLS in Boston, saying that when the MLS tries to arrange the fees between the buyer and the seller, that is inappropriate. And there's been a big class action lawsuit against some of the traditional brokers in Missouri that resulted in billions of dollars in damages. So the industry is suddenly seeing lions and tigers and bears, where basically a business that hasn't changed in 20 years is changing really fast right now. And so it's made everyone on the street looking for which company to invest in and which company to get out of really nervous, trying to figure out what is this going to look like in 2 or 3 years.
Tell us a little bit how Redfin works, because
Yeah.
it's certainly it's an industry disruptor from the sounds of it. Instead of having to
Yeah.
pay twice for two agents, I can just use one, if not zero. Is that walk me through the logic here?
Sure. So Redfin is a real estate website, one of the top real estate sites in the country, but it's vertically integrated like Amazon. So it's a website that employs its own real estate agents. And the idea is that technology can make us more efficient so we can charge half the typical fee. We list a home for a fee as low as 1%. For most of our history, we've given people part of the commission that we get for representing a buyer back to the consumer. And that has often put us at odds with the industry. And now I think the industry is coming that way, and the regulatory regime is coming that way. Our challenge has always been that you want to be a member of the club when you're selling houses. You want to feel like if you're hiring Redfin, that we know all the agents in town and we're going to work well with everybody. But at the same time, you want to get a deal. You want to get better value for your money because it destroys wealth if transaction fees aren't, a tiny sliver of the trade like it is with stocks, but, a quarter of your whole down payment. So, the capital that you're putting in, you give up almost a quarter to a half, depending on where you are. And so Redfin has tried to make that much more efficient, and we've had all sorts of ups and downs with it. But it just makes us a very, very odd duck. I came from tech, and now I've had to learn all about real estate. That you called me a real estate expert would have been quite a compliment 15 years ago because I really just knew websites. But now I live, eat, and breathe real estate, and we're sort of half retail, half tech with the margin profile in between too.
Yeah, I'm just curious as to how technology is going to change the landscape of real estate buying and selling. Do you see AI playing a role in the changing trends?
Oh, it's already made a huge difference. So there are two fundamental questions that people have in real estate that artificial intelligence can answer. Where should I live and how much should I pay? And right now, whether it's Redfin or our competitors, people are less likely to find the home on their own and more likely to get a recommendation from artificial intelligence, where we analyze what they're clicking on. And instead of just giving them the result that they asked for, we say, what about this house? And they are more likely to click on that house than the one that they asked for. And that goes all the way through to touring it and making an offer. So I think artificial intelligence is changing where people live. My favorite story was there was a couple who was shopping for a home in Chicago. They lived in Chicago, and the husband called to say, "You keep recommending homes in San Diego. Your AI is completely off." And we said, "Well, you should talk to your wife because someone is looking sunnier places." And they ended up moving to San Diego. So that's the first part. And then just judging how much you should pay. That's another reason you would hire a real estate agent. Artificial intelligence has mostly answered that question. About 95% of the time, the algorithm is going to be very, very precise with what you should offer on a home. It's made the market a lot more liquid.
Would that depend on the demographic you're presenting this technology to? Presumably, the younger people might fall into that category of people who trust the AI more. But I'm guessing the older people, my mother, for example, doesn't know how to use a computer. She'll probably still trust a real human being making recommendations more than a computer algorithm. No,
David, first you just have to answer the question, is your mother younger or older than I am?
I don't know how old you are, but she. I
52.
don't want to answer that question on air.
Oh,
But
never
she's
say a
gonna
woman's
attempt.
age. Um, yes. So uh, the way people use our website, the younger folks use it differently. They're much more likely to use our service. They're more likely to be rational about fees. They're more likely to like a technology-powered broker. I'd say the biggest change that technology has wrought in real estate is just in how people hire a real estate agent and tour homes. So it used to be that you hired the first agent you met, you felt this emotional bond. But now real estate's become more like Uber or DoorDash, where you can click a button on Redfin or another website and an agent will meet you at the house in 30 minutes. And you have no problem doing that 5 times to 5 different real estate agents. And so agents are working a lot harder for a lot fewer sales. And people are getting into houses much faster. We thought when the market was really hot that days on market was just an artifact of a hot market. But even now, in a really cool market, homes are selling a lot faster, and it's actually technology that's wrought a secular change instead of anything cyclical. People can see the house in like 45 minutes, and then when they finish the tour, they can hit another button to write an offer, and it's just reduced the sales cycle. It's made it very short, and the consideration cycle where people feel like, oh my God, I got to make a decision about this house in 30 seconds flat.
What do you think the government can do or should not do when it comes to making homes more affordable to people, young or old?
Yeah,
I'll give you some things that here in BC, British Columbia, where I
yeah,
live,
yeah, yeah.
that the government has tried to do. They've raised taxes on buying from foreigners.
Yes.
They've
Not
installed
a
a
little, a lot.
empty, yeah, a lot. They've installed an empty home tax. You can't leave a home
Yeah.
vacant. And now, as of
Hey, hey.
November, they're proposing to not ban but change zoning so that more multi-unit homes are being favored. So basically, incentivize more multi-unit
Yeah.
homes, less and fewer single-family homes. Are these the right policies? Will these make a difference, Glenn?
I think so. I mean, they've definitely made a difference in Vancouver. Housing prices have really fallen in Vancouver, and sales volume is significantly down, even though immigration to Vancouver is really strong. Here are some things that you can do. Number one, the municipality, the county, even at the neighborhood level, there are all these restrictions around what you can build, and the federal government just needs to nuke all of it. We need to be explicitly pro-builder. The left, which wants low home prices and affordable housing, needs to embrace builders. They hate each other right now. For 50 years, mayors wouldn't be caught dead at a ribbon cutting ceremony with a builder. But we need to figure out everything we can to build not just a few more houses, but millions and millions of more houses in the United States. So that's one. And then I think the other thing is that rates are just so volatile right now, not just for consumers, but for builders. If you've got 5 years to get something permitted and built and sold, and in that time, your cost of capital is going up and down. Many builders are leaving the business, or they aren't being as aggressive as they could be about building for volume. They're being very selective and doing a small number of units at high margin. And so there should be an industrial policy to provide more stable financing to builders who want to build large amounts of housing. That would be the second thing that I would do. And then the third thing, if I'm just on a roll, and I'm not sure that I am, is you can offer all sorts of incentives. In the Great Recession, there were new homebuyer incentives. It's clear to me that a 29-year-old American could benefit from that today. There are so many government entitlements that go to people who are 70 years old, and there are so few that go to people who are starting a family 30 years old. That would be my last thing if I were king for a day.
Okay, so I understand the idea of making homes more affordable for people. Obviously, that has advantages that don't need to be repeated. It's obvious. But what about the real estate industry in that jurisdiction? Aren't you killing the industry by putting limitations on capital appreciation?
I just don't think you can prioritize the industry ahead of the consumer. I mean, the industry I think the NAR is still the most well-funded lobbyist group. It donates more to local politicians and federal politicians than anyone else. And so the level of regulatory capture in the United States is pretty alarming to me. So I think you have to focus on the young American and not the real estate broker or the boomer who has a house and doesn't want it to decline in value. That's a tough bullet to bite, but I don't know. Otherwise, what's going to happen? What's going to happen if people can't believe in the American dream? Maybe it won't be a revolution, but you're definitely going to have a lot of social unrest and discontent.
Home affordability index, both in Canada and the US. It's been going down just from a valuations perspective. If I were a homeowner, should I be selling my home now? Should I treat it like a overvalued stock?
No, I mean, this goes back to how I think about timing the market. I would sell your home if you don't like your home and you want to move somewhere else. I would not sell your home because it's a good time to sell or a bad time to sell, because no matter what yahoos like me say on these esteemed channels, no one can time the market perfectly. And what really matters is whether you have a good asset or a bad asset. And if you have a good asset, you should buy and hold. And if you have a bad asset, you need to cut loose of it.
Well, the yahoos like yourself know a lot more about real estate than most of us can remember. So we appreciate your insight. I want to pick your brain on one last question. If I want to buy a home right now, what are the questions that I need to ask myself or have answered before I go ahead and make a purchase?
Make sure you're not going to lose your job, because you have to pay a mortgage. But mostly you have to ask yourself, do I love this house? Every house has got problems with it, so you can talk yourself out of any purchase. But mostly, can I live in this house for more than 5 years? And if you think you can do that and be happy about it, the dumbest financial decision you could make would be to hold off, hoping that the price will drop a little bit.
Okay, so if someone like me is analytical, I'm a numbers guy. I try not to make financial decisions based on feelings. I try not to make most of my life decisions based on feelings. They've turned out pretty badly in the past. But that aside, I walk into a house. I can't just make up my mind as to whether or not I like this house or I don't. How do I feel about what are some concrete things I need to be looking for me to help make this evaluation, Glenn?
All right. I mean, you want my opinion. Uh, you want to buy the worst house on the block. You never want to buy the best house in a bad neighborhood unless you think the neighborhood is really going to turn around. Um, you want to focus on square footage. Um, a lot of times we can get top dollar for a house by painting the cabinets white and putting in subway tile in the back, but the square footage hasn't changed at all, and yet someone's paying $60,000 more for it. That is not sharp buying behavior there. And obviously you want to compare what you could get renting versus buying. So you should tour homes you could rent or properties you could rent versus homes you could buy. And then I would run a net present value calculation around the cost of capital and things like that if you really want to get out the spreadsheet. But I promise you, the thing that you'll plug into that model that will change everything is the holding period. If you have a long enough holding period, if you're paying rent for 10 years waiting for the perfect house, you've made a bad financial decision.
I should have bet you several years ago when I first bought my home in Montreal. I had a spreadsheet and I had all the variables that
I'm here for that.
I had all the variables that I cared about, including obviously price, affordability, distance to work, amenities, view, so on and so forth. And then I ranked these variables based on how important they are. I
Oh
gave
my
them a
God.
rating. So
Tell
that,
me about it. Yeah, yeah.
so it's like price is obviously the most important for me because I was a young guy. Something's not affordable. I'm not going to buy it. So that's like 50%. Then things like view, like 5%, plus distance to work, 20%. And then I give each of these variables a score, 1 to 10. And then the property with the highest weighted average score was the one that I bought. So that was my
Did
method.
you buy it by yourself?
I'm sorry?
Did you buy it where you were the only person living there?
Yes, yes.
Yeah.
Yeah. So
Talk to me after you
that's
buy it with somebody else. Um, David, I have a question for you. Can I ask one question of you?
absolutely. Yes, please.
The hair. Where did that magnificent hair come from, and how often do people want to know your secret?
Well, you flatter me, Glenn. If only the ladies could think the same. But no, it came from my mother, and my stylist in Vancouver does a great job. So props to her.
Love it. I love it so much. It's why I
Thank,
agreed to do the show. I saw the hair and I had to have it.
thank you, Glenn. Well, I like your hair too. I like your insights. We love real estate guys. Where can we learn more about you and Redfin?
Redfin.com. Uh,
Okay.
there's a little CEO section on the blog if you care about that, but mostly just redfin.com.
All right. We'll put the links down in the description below, redfin.com, and check out Glenn's bio and the website. Thank you very much for your time, Glenn. Happy New Year. Merry
Happy New
Christmas.
Year.
Yes.
Go David. Go Redfin.
Go to Redfin, go real estate. We'll speak again in the new year. Thanks for coming. And thank you for watching. Don't forget to like and subscribe.